Hi folks, this is Raj Sastry from Raj Option Trading. Today is April 18th, 2021. I want to talk about ideas for buying the stock or buy call options or call spread. It can even be, call back ratio spread. So with that, let's jump in. So when you are a option buyer, you want volatility to be low and you want the RSI or relative strength index to be relatively low. So your thought process is, you want the stock to go up, so that way, you can make money. So with low volatility and low RSI, you can do either buy the stock outright, or you can do buy call option or call spread. So your hope is, stock is going to go up, and you will make money. So with that, let's jump in into few stocks and few ideas. So here I have a list of stocks here. These are really low IV rank. IV rank is basically implied volatility rank. You want the IV rank to be relatively low when you're buying the call option, and you want the RSI to be relatively low. This relative strength index, and you want fundamentally good companies with the nice sales growth, nice gross margin. And you also want stock to be relatively, cheaper. I mean, stock has fallen off a little bit from their 52-week high. So with that, you also want to note the earnings state, because as earnings becomes closer and closer, the implied volatility or the IV rank will go up. So your thought process is buy the call option when the IV rank is low, and as the earning approaches, the IV rank is going to go up. As the IV rank goes up, you'll basically make money. As the IV rank goes up or stock price goes up, you'll kind of make your money. So with that, let's jump into some of these ideas here. I got a few companies here, Editas and ACADIA Pharmaceuticals. Both are beaten down stocks. You can see here down 65% from 52-week high, and we got a couple other stocks here, 3D Systems, EXPI. Some of these stocks here, they got good sales growth here, and we got Canopy Growth, CRISPR, and a couple more. And I also like some of the beaten down stocks like Virgin Atlantic as an example. That's also a good stock. And Plug Power also came down drastically. And also we got some stocks here like Riot Blockchain, Magnite, Vipshop, VNet. These are all beaten down pretty hard. So with that, if you focus on stocks with nice sales growth, nice gross margin, the ones I highlighted in green background here, those are the ones with the good sales growth, and good gross margin. Then I got a couple more here. We got Joy, Farfetch, Solar Edge. Same story here. Nice gross margin and nice sales quarter-over-quarter sales growth. Solar Edge, as you can see here, sales growth is not positive right now, but has got good gross margin, and this is a fundamentally good stock in the past. And then you got Pure Storage, Digital Turbine. Apps or Digital Turbine is one of my favorite. It's been doing nicely. Now it's taking a breather here. I think it's good to buy some and wait for a long time. Then we got a Brazil fintech play, Pagasuro Digital. Again, it's nicely off of the 52-week high. I think it's good to either buy the stock outright or buy call or call option. Then I got Live Nation, which is a recovery play, and Bosch Health. I think these guys are into vision and some of the vision care, eye care. So with that, let's jump into some of these ideas. Let me go up here. Let's first look at Editas, ticker symbol EDIT. With that, I'll go into Thinkorswim platform here. I'm giving the ticker symbol EDIT, Editas. As you can see here, stock has came down. Stock has come down drastically in last couple of months, or at least 2021. Stock has come down pretty nicely. And as you can see here, RSI is fallen off the cliff. It's a very low RSI at this point. DMI chart is showing right now bears are under control, meaning the red line is above the green line. And the implied volatility perspective, it's 41, not too high for this stock. I think it went all the way to 98 or so earlier. And from a money flow perspective, money is not flowing into the stock. This is really a counter trend type, pick here. For Editas, it's also, you can either buy call or call spread, but better idea for Editas would be to buy the stock and hold it for a long time, because with some of these plays, especially biotech, sometimes people can get burnt if you buy call option if the stock continue to go down a little more. So with that, let's also look at a John Carter's trade the trend here. I see here on a 2-day, 2-year chart, at least it's showing some bullish sign here. As you can see here, the the yellow lines are getting shorter and shorter, and then we have a red dot here, meaning a squeeze is about to be formed. So there is a chance this might go higher, but as you can see here, according to John Carter, we got to make sure the shorter term, um, you know, A wave should be above zero. Right now, it's not above zero yet, and the longer term C wave also should be above zero. I think it's barely above zero at this point. So it's not a clear signal here, but that's why I would say if you want to buy the stock, you could buy the stock outright. But if you want to buy the call, you got to be a little bit conservative on buying the call. You should go a little longer time frame and buy the call option. So with that, let's go into option chain here and see what we can do. So Editas, I would go maybe 124 days out. Stock price is at 34 right now. All-time highs, 52 week highs 99. I would go somewhere 34. I would say 30-40 type call spread here. So if you do 30-40 call spread, so you are paying $4.25. So remaining $5.75 will be your profit potential. So with that, let's confirm and send. So as you can see here, you're paying 425, you're making 575, and the break even is $34.25, which is I think it's a little bit below current stock price. So if the stock stays around the same price, you'll kind of break even. But if the stock makes a move higher, then you can profit. So this is a play where you make more than double of your money with this call option if the stock goes well. And with that, I think your max loss is whatever you paid for the call option, which is 425, and your buying power effect is also 425. So this is a good play if you really believe in Editas and stock has fallen down a lot. This could be a good play. And other good idea is to buy the Editas stock outright, because it's become so cheap with this crash. So with that, let's jump into next idea here. For that, let me go back to this chart here. Next, I would like to look at EXPI. EXPI is one of the real estate software play, and this stock has been doing very nicely in the past. Let's go back to Thinkorswim platform here. So if I go to the chart here, so EXPI, as you can see here, stock has fallen down a little bit of late. And the 52-week high here was $90, and now it's down to $36. And as you can see here, volume is kind of steady here. RSI is low. And DMI chart is indicating a bearish indication with red line above the blue line. And IV itself is low. That's when you want to be a call buyer. And money flow is really negative at this point, meaning money is flowing out of the stock. This is again a counter trend type position here. And with that, let me go into um, one more chart here. Here, this is the John Carter's squeeze chart. I don't see any squeeze happening here, so we can ignore this for now. So with that, let's go back to option chain here. Stock price is at 36. You could go 152 day out, and you could do 30, 40. So we could go here 30, 40 call spread. There you go. You're paying $4.50. Remaining $5.50 is your profit potential. With that, let's confirm and send here. your you'll break even if the stock price stays above 34.50. It's already above 34.50. That's why it's a conservative play. And your max profit is 550. You're more than doubling your money with this. And your max loss is 450, the money that you're paying to buy this call spread. So you could confirm and send this. Is a good risk reward type position here. So with that, let's go to our next stock here. So I would choose probably Canopy Growth. It's again it's into cannabis, as you can make out, and stock has fallen off 50% from 52-week high. I would go and take a look at this one. So CGC. So if I go to the chart here, stock has fallen off of 56.5, which is a high here. Right now they're at 27. I like, volume is kind of on the balance. Volume is kind of steady. It's good. People are really buying this. RSI is low. That's how we like it. And right now it's on the bearish territory. That's why in the DMI chart, the red line is above the blue line. And as you can see, your volatility is trying to pick up a little bit here, not too much. And money flow is kind of getting stabilized here, flat to down. So with that, let's go in here to option chain. Stock price is at 27, so you could go maybe say 89 days out, or you could even do 180. I would probably start with 89 days out. So if I do this here, stock price is at 25. If you want to be conservative, you could do 20, 30. But I think you can be a little more aggressive than that. I would go maybe say 22.5 and 32.5 spread. So with that, I can go buy here 22.5 and 32.5. There you go. So with this spread, I'm paying $4.67. It's a $10 wide spread. Remaining, $5 and 33 cents is my profit potential. With that, let me confirm and send. So I'm basically, more than doubling my money here. Break-even price is 27.17, which is just below current price. And with this max loss is whatever I pay here. That's the cost of this call spread, which is 467. I could go and send this. It's a very conservative play. I could go send it, or if you want to buy this CGC stock outright, it's a good time because it's down from its 52 week high. So with that, let's go to next stock idea here. So I also like, things like Jumia. That's also good, fintech play in South Africa. I think it's a German company. And there are other companies like CRISPR, Riot blockchain, Magnite also dropped a lot. Vipshop also dropped a lot. This could be a good idea. On a Vipshop is kind of stabilizing now with all this the fund debacle around Archegos. It kind of came down drastically. A Vipshop, you could if you go Vipshop here. So if you look at the chart for Vipshop, stock has fallen drastically here. On the balance, volume is now trying to pick up at this point. RSI is also trying to stabilize at this point. DMI chart is indicating it's bearish at this point, even though red line is kind of trying to come down a little bit. And on the balance, check in money flow is indicating money flew out of the stock, but now it's kind of stable to a little bit downtrend. Not like before, but a little bit downtrend. So with that, let's go into option chain here. Stock is at 28. I could do, let's see, 25, 35 could be good here, good one here. If I do 25, 35 spread, I'm paying $3.75 and I'm making 625. I want the stock to stay above 28.775. As you can see here, this is a little bit aggressive play because we are, the break even is really just above the current price. You could turn this into a little more conservative. For that, you could do 2030. So if you do 2030, if you do 2030, it will become a little more conservative play. If I confirm and send here, let me actually delete this and do again. There you go, $5.60 remaining. $4.40 is our profit potential. So with that, if you look at this here, your max loss is what you pay, which is 560. Your max profit is 440. You will break even if the stock stays above 25.60, which is conservative because current price is 28.43. Stock is trying to make a up move as we speak. It's from a reward perspective, it's like 1 to 1. You're not doubling your money, but you're making little less than doubling. So I think it's a little conservative play, but it's a good idea. Or if you want to buy the call option outright, you could buy probably somewhere here delta 78 call itself. You'll pay around $7 for this. So you could do something like this, and you'll have unlimited profit potential. If Vipshop goes to $100, you'll make nice money. It's not a it's a it's basically you're buying a single call option. Your profit potential is much more here. And if the stock goes below $30 by 20th August, you'll lose your money. So that's why it's high risk, high reward type play. And you could also buy stock outright at 28.43. That way you can participate. You don't need to worry about call option where you will lose money if the stock does not go up. So with that, let's look at maybe one or two more plays here. Let me go to the next slide. Other one is Joy. Joy is, I think it's got nice quarter-over-quarter sales growth, good gross margin, and stock has been up and down off late. So you could do YY and go to chart here. As you can see, Joy, it went up to 148. I think now it's 97. And you could, go here. And if I go to John Carter's, trade the market here, looks like there is nothing great here. Let's go back to option chain here. So stock price is 97. So we could do 90, 100, 124 days out. There you go. So I'm paying 465. So remaining 535 is my profit potential. I could confirm and send. If the stock stays above 94.65, I will make money. That's why it's a conservative play. I make more than double. I'm more than double my money. I don't need to wait till the expiration date. Once I reach maybe 50% profit, I can sell this off and take it from there. So with that, let's look at one more here. I also like Farfetch. It's been beaten down 32% from 52-week high. So FTCH, go back here. So from a chart perspective, as you can see, your stock is off its 52-week high here, and from a volume perspective, it's picking up. That's good. RSI is low, and here also it's a little bit bearish, meaning the red line is above blue line, and I think it's red. It's at this point it's bearish. And from a check-in money flow perspective, money is now flowing out of the stock. So it's again a counter trend type position here. So I would go here. Let's see, 89 days is good enough. So I would do 45, 55 on this one. There you go. So I'm paying for $4.33, and my profit potential is basically $5 and um, around 40 cents or so. If I confirm and send here, um, my max profit is 567. As you can see here, I'm paying 433. So basically, I'm more than doubling my money here. Break-even point is 49.33, just below the current stock price. I could do something like this conservatively, so I don't lose too much money. At the same time, participate in the upward move of Farfetch. So let's look at one more stock. I'll go to probably apps here. Digital Turbine. This is one of my favorite stock. I've been buying this off late. So apps, if you see apps here, Digital Turbine, from a chart perspective, stock has fallen off. It's a nice looking chart here. Goes up a little bit, down, up, down, up, down. Now it's down. So I would, yeah, as you look at here, I think people are buying the stock. That's why on the balance volume is nice here. RSI is low. This is a little bit bearish because the red line just crossed the blue line here, and money is right now flowing out of the stock. I think it's a good counter trend type position here. I would go to apps here, $75 stock. I would buy 70-80 call spread. So right here, there you go. I'm paying $4. $6 is my profit potential, and if the stock stays above $74, I will break even, and my max loss is 400. I more than double my money with this. It's a good risk reward type ratio. And let's look at probably one more here. I might look at PAGS. It's again a Brazil based fintech play. Nice stock. So PAGS, if you look at the chart of PAGS here, nice looking chart here. Right now it's a little bit, stabilizing. On the balance volume is kind of stable here. Money is, I think it's flowing into the stock. RSI is low, and red line is above blue line, indicating it's a bearish sign right now. And check-in money flow is a little bit flattish to down, meaning money is right now flowing out of the stock. So with that, let's go back to option chain here, $46 stock. I would do a 40-50 call spread here, 124 days out. So I could do something like this. There you go. So I'm paying $5.30, remaining $4.70 is my profit potential. With that, let me confirm and send. Profit potential is, my break-even price is 445.30, just below the current stock price. My max loss is 530, whatever I pay right now. Max profit is 470. Little below doubling my money, but I think it's a good risk reward. So with that, I could send this and go from there. And we look at one last one here. Live Nation. Live Nation is really a recovery play here. Stock has fallen off 14% from year's high, 52-week high. If the if the people take vaccine, they're willing to go and go to the concerts. So that's how this company makes money. And also Bosch Health, it's also a good company. So probably let's look at Bosch Health here, BHC. So if you look at the chart here, nice looking chart again. Right now it's in a little bit consolidation type pattern. I could, as you can see here, money is on the balance volume is pretty steady here. RSI is a little bit down, a little bit bearish at this point, blue line below red line. And check-in money flow is indicating money is flowing out. Again, counter trend type position here. I would do BHC $30 right now. I would do 25-35 spread. There you go. So I'm paying 495. So remaining, this is a $10 spread. Remaining $5.05 is my profit potential. I would confirm and send. My break-even price is just below current stock price. It's a conservative play, and I'm paying 495, making 505. Little more than doubling my money. I think it's a good position. So with that, I can confirm and send this. And last but not least, I think it's a good one. Let's go back here. So what we need to look at is really we also need to look at the earnings state here. Be a little bit careful around the earnings. If you make good profit, for example, if you buy Joy or YY, if you make a good profit by 520, you can sell the position for a nice profit. So that way you don't need to take the stock or option into the earnings if you're having a call option, but you're buying the stock outright. You could hold it for a long time. You don't need to worry about earnings. So with that, thank you very much. Happy trading.